Hello, Namaskar. You're watching BT TV. I'm Tanya Neja. Well, foreign portfolio investors have been on a selling spree in the Indian stock market in the last few sessions, and experts believe that one of the major reasons for FPIs pulling out funds from the Indian markets is said to be the ongoing geopolitical crisis in the Middle East. Well, in this video, we are going to tell you all about the FPI's activity in the Indian stock market, what they are buying, what they are selling, everything. So, according to the National Securities Depository data, foreign investors have offloaded shares worth 12,525 odd crore rupees across 8 sectors in the first half of April. It is also important to note that overseas investors were buyers of Indian equities worth 17,932 odd crore rupees across 15 sectors between April 1st and 15th of April. However, they have pulled out substantial amount of money from the Indian markets last week. Now, the IT sector witnessed the highest selling by foreign investors at 4,658 odd crore rupees. Remember, FPIs also sold shares worth 1,659 odd crore rupees in this sector in the month of March. Now, over the past 1 year, the IT index has underperformed the broader markets as the growth for the Indian IT sector has moderated over the past few quarters. Experts believe that this is due to the weak environment as clients continue to restrict discretionary spending. Fast-moving consumer goods, that is FMCG, that also witnessed selling pressure from foreign investors. They turned net sellers and sold shares worth 4,351 odd crore rupees after buying shares worth 6,241 odd crore rupees in the month of March. Consumer durable and oil and gas sectors also saw foreign selling worth 1,624 odd crore rupees and 923 crore rupees respectively. On the flip side, the power sector, it has received the highest inflow from foreign investors. They bought shares worth 5,143 crore rupees, marking their largest buying spree since August 2023. Now, experts attribute this move to the soaring temperature, prompting investors to add power-related stocks to their portfolios for anticipating earnings growth. This surge in demand is expected to drive record high power consumption, boosting earnings visibility for power-related shares. Now, consumer services, automobiles and telecommunications, these sectors also received foreign inflows worth 1,500 crore rupees each in the first 15 days of April. Now, according to ICICI Securities, this behavior of beta outperforming in a rising global risk environment comes from an improving near-term growth outlook for domestic cyclical versus defensives like IT and FMCG. The three factors that are size, beta and value, they continue to outperform in an environment where growth is driven by investment rate. Now, apart from the bond yields and geopolitical crisis, another trigger for FPI selling was the tweak in India's tax treaty with Mauritius, which would now impose higher scrutiny on investments made in India via the island nation. FPIs have turned net sellers not just in the Indian equity market but also in the debt market for the first time since March last year. This again is the consequence of the rising US bond yields and the concern regarding rupee depreciation. However, it is also important to note that in FY24, the debt segment saw net inflows of $16.4 billion, marking the highest influx since 2018-19. So that was all about FPI's activity in the month of April, but lots more coming up for you only on BT TV, whether it's Indian equity market, debt market, mutual funds, everything here on BT TV. So stay tuned and many thanks for watching.
On Tech Today, it's always our endeavor to really see which sector Technology is disrupting all the time, whether it's auto, business, lifestyle, fashion. And then there's the creative world. There's Bollywood, there's filmmaking, there's so much to what technology can do to make your lives